market. We're going to start out by looking at the VIX because the analysis in the VIX has been so important to this analysis in the stock market, and it's been really good. So let's stick with what's working for us, right? We talked about the minor fourth cycle in the dominant in this whole harmonic family right in here as being the one where it's not likely that you can get pops that hold of any significance in implied volatility. You see that right in here, that last one right there, how you got a pop and it came right down. Here you got a pop, it came right down. And here you got a pop and it came right down. So implied volatilities are suggesting in here that the next major VIX low timing range is right in here. That is mid-May to early June. And that says that the period of stock market rebound is likely out into mid-May to early June. And we've been in a rebound, even though the stock market has given a lot back here in the last couple of weeks in a pretty steady decline. When I show you the charts, you'll see it really hasn't gotten to where it did any damage. But then out over here is where the high risk begins for the stock market again, out into the summer and out into the fall. This period out over here from somewhere in June, probably way out potentially into next year, is a time frame where the stock market could have a ton of trouble. But right now, it's in a time period where it's not likely to have a lot of trouble. And we talked about that and the likelihood that the stock market pulled back, it would probably rally again and try to get back up to where it was. Right now, the stock market had a big day. And yesterday on Tuesday, and when the news came out about Netflix, the stock market got hurt and it fell overnight, but then it rebounded again. Now while I'm doing this recording, it's about unchanged on the day. But if you told me that, we would have a day where Netflix was down 37% to $218, and the stock market would be unchanged, the S&P 500, with the NASDAQ only down 1%, I would tell you, well, that wasn't likely. And that, if it did happen, it would be the nature of a market with some strength in it. And so that's what we're seeing here today. This does suggest that the market will continue to try to get upside in what I think is a bear market rebound out into sometime from mid-May out into early June. Now, when I look at this daily chart, you could see the harmonic families in here that are pretty exquisite. Well, maybe exquisite up till this point right over here, where that low came and this failed rally. That is really strange looking. That's what the market gave me, and that's what my analysis has shown here. However, it makes me wonder about this low right out over here, because that is a better looking low than this low right over here. So if that were the case, then the period of declining applied volatilities or the period of rally in the stock market would shorten up in here. When I look at this dominant cycle here, that takes you to the June 27th time frame. Now, we know that looking at the bigger cycles, the weekly, and looking at the stock market cycle, that would be quite late. So it makes me wonder, and I'm just going to duplicate this for you to see. If this was the low or this really closed up, I'm shifting this over because I'm just doing analysis right in front of you. If that was actually the low, that would take it out to June 11th. If the harmonic family was actually shortening to look something like this, let me just activate that and take it to this low right here, then that would take you somewhere out over here to, that is around June 1st. So this is kind of the machinations I go through when something happens that I don't quite understand, and I'm trying to understand it. So what's going to bring this date in to look more like what the stock market really looks like? That's with the peak in May or June. Well, it would be either with a left shift or a slight reduction in the cycle harmonics, and I don't know what to do with that yet. So right now I'm just keeping it at the ideal, as you see right in here. And if I keep it at the ideal, then this first minor cycle low was due right here, and that's exactly where it was. That would make the next intermediate and minor cycle low in the VIX due here in around May 5th, and that would mean the stock market rallies here to about May 5th. And when I look at that and the alignments here, it says don't shift it. It says don't do any of that yet because these are aligning right. This is kind of a lesson in how to deal with market irregularities or shifting in cycles and what I have to look at. We have a lot about that in the cycle analysis workshop. So that's a look here at the VIX and an indication that the stock market is likely to keep trying to rebound.